Hi there, welcome to Kneppy Invest and welcome to Monday the 25th of August 2025. Time is currently 3:12 p.m. So just under 1 hour left of trading today on an interesting day. I expected better. I expected better ASX. I'm a little bit disappointed. And I was away for most of the day. In fact, I went away, left home at about 5 p.m. to do this fairly long hike. My last conditioning hike before I go away. It was about a 5 hour hike. I came back home. The power was out for a little bit because my dad's putting fiber to the premises in the house, which is two thumbs up. And it's all free. It's all free. NBN provides this for you if you want it. And so the power was out for a little bit, but I can actually look at announcements via hotspotting my phone into my iPad. So as soon as I came home, I started looking at all the interesting financial results that were released today, and another really interesting day. I'm very happy to see Aussie Broadband up a fair bit. Also, very happy to see IPD Group up a fair bit as well. In fact, both those companies are in the top five. I didn't really have a look at the market. I expected to see a really positive day, and we haven't really got that. I probably would expect that we started pretty positively, maybe up 0.5%, even more than that. And we have seen a little bit of weakness come through today. I'm surprised tech is down. Small caps have had a really good day, by the way. And mining, look at mining. Resource up 2.6%. Okay, so the agenda for today's video, we'll go through the ASX today, have a look at the best and worst performing sectors, indices, and then companies. Then go into the top 5 stocks of the day. Mostly, oh no, 3 positive reactions, 2 negative reactions. And then we'll have a look at the chart of the day. In fact, I'm going to have to change the chart of the day because I've put that company into the top 5. So I might choose another company that did not quite make it into the top 5. And then that'll be it for today's video. And I might actually record another video. And what I might record is my top 5 romantic movies. Oh boy, this was a request, and there was 5 thumbs up, so I will record it. Although to be honest with you, I don't mind recording these sort of videos because I suppose it does give an insight into who I am. Yeah, why not? Unless you don't really want to know who I am. Okay, so let's go to the ASX today. And I've already mentioned that I'm slightly disappointed. Slightly disappointed. In fact, the XJO is still below 9,000. So it looks like, in fact, oh yeah, it did open up really good. Opened up 9,050. So significant downside today. Not sure what has happened. In fact, not only XAO, XJO, but also tech have all seen a bit of weakness, particularly just after open. We'll say between open and about midday. And since then, it's been okay, but really interesting start to the day. Not sure what has caused that. I haven't really taken any notice or any news flow or anything like that. So we have seen a little bit of weakness in our market. And again, 9,000 for the XGO has been a bit of resistance. There you go. Best performing sectors. Now, mining's had a really good day. So if we didn't have mining, and I actually did see BHP share price was up about 3 to 4%. So if we didn't have mining and iron ore, that sort of thing, we would have had a pretty bad day, relatively speaking. And financials down 1%. So that's probably the big banks. And they've probably been the reason we've had a pretty bad day. But also staples down, discretionary down, utilities down, industrials down, telecommunications down. I'm wondering if it's because some of the results, I have no idea. Gold's had a really good day, up 2.72%. So yeah, across the board, mining's had a really good day, but looks like the banks have had a pretty negative day. So today it could be a bit of rotation out of the banks into mining. And then tomorrow we might see the complete opposite. It looks like people just rotating in and out, back and forth, back and forth. I don't think you have to do that. I really don't think you have to do that right now. Okay. What do I usually do? Oh, ASX 20 down 0.26%. I would say, without doubt, that's because of the banks. And we've probably had a really good day for iron ore companies, but we're going to get maybe some more insight. All that drop below being positive at about midday, had a nice little bounce and then back again. Anyway, so I'd say maybe 10 up, 10 down. Well, there you go. I'm a genius at this game. 10 up, 10 down, and the worst performing companies, Wesfarmers. I do have to admit, Wesfarmers looks so expensive. Even though I do think it's a quasi high quality company, at least I have no desire to buy Wesfarmers right now. Just like Woolworths, I have no desire to buy Woolworths. I don't care, it's offensive. I've heard some experts say Woolworths should be a part of everyone's portfolio. Why? Why? Why does it need to be? I don't agree with that. And a pretty bad day for Westpac, Commonwealth Bank. Have some of these banks gone ex-dividend? Who released results? No, CBA released results. When do they go ex-dividend? Or have they already gone ex-dividend? Let's have a look. Ex-dividend was last week. Okay, there you go. Anyway, so a pretty negative week for, or negative day for all the big banks, all down by over 1.3%. And a pretty good day. Let's have a look. Iron ore, BHP, Fortescue, Rio Tinto have saved the day, which I did not expect to say at the start of the day. Okay, and a pretty good day for Brambles, Macquarie, and Aristocrat. Okay, now on to the top five. No, I always do this. I'm starting to do this all the time. On to the top gainers and top losers. Okay, now let's have a look. A company called Arc Mines up 67.57%. I actually do want to speak about Locksley Resource share price up 38%. I did not have a look at Arc Mines at all. Should I? Maybe I can. Should I turn my attention from Locksley to Arc Mines? Let's just have a look to see if Arc Mines did release anything. I've never heard of this company before. Share price up 56.76% on, what was it? Drilling results? Oh, 4.5 million investment by QIC Critical Minerals Fund Development. I suppose that's okay. Now, I've never heard of this company before, and they're fairly small, market cap 20.5 million. That's after share prices risen. Now, we can see on market index, share price is up 68%, but on, what do you call this, ComSec, it's only up 57%. That's because market index is 20-minute delayed. ComSec is, what do you call it? It's up to date. It's not delayed. What's another word for not delayed? It's to the, I have no idea. Anyway, $4.5 million investment by QIC Critical Minerals, Critical Minerals and Battery Technology Fund to advance development of the Sandy Mitchell rare earth. So this is a rare earth company. This actually is managed, it's a government, Queensland government-owned corporation with $131.2 billion in funds under management. Interesting. I've never heard of this before. So since I am a Queensland resident, this is sort of mine in a way. Anyway, rare earths. So I would expect this chart to look pretty good. AHK. First time I've ever heard about this company. And let's have a look at the chart. Is the chart? Oh, no. This could be potentially a breakout. It's not my favorite type of announcement, but it's not looking as good as I thought it might have been if it's a rare earths company. Not like Locksley. Locksley, let's have a look at Locksley and compare. But Locksley might be antimony, I think. It might be, I think it's antimony. And yeah, transformative partnership to fast track antimony processing. And look at that chart. Look at that chart. What a chart. And by the way, the market cap of Locksley is not that high. It's only $76 million. I thought it might have been a little bit more. Interesting enough, among the top gainers, I'm not seeing any companies who release results until we get to Southern Cross Media Group. Share price up 19%, and Aussie Broadband up 19.83%. And funny enough, both those companies are in my top 5 stocks of the day. Okay, list of companies, list of top gainers by market cap. We also have Ansell. Sorry, you did not make it. You have to do better. 8.8% higher is not good enough to get in the top 5 stocks. Same with you, Regis Resources. Did they release results? I know Ramelius did. Maybe. Megaport, nice bounce. It had a bounce. Digico bouncing. Aussie Broadband, not sure about WA and Resources. Navigator Global did release results. Accent Group released results last week. Share price dropped. IPD Group released results in the top 5, up 13.57%. What else? Premium release results. And that's about it. So I discussed 3 of these companies. IPD Group, Aussie Broadband, and what's that other company? Oh, Southern Cross Media Group. I really have to. Share price up 19.7. I really didn't want to because it's media. It's like, meh. Anyway, let's have a look at the top losers. These are a bunch of losers. Now, Close the Loop was in my top 5 stocks. And then I went, nah. What I'll do is I'll just talk about close the loop in the top losers because it's a loser of a company right now. Other than that, Reece had to be in the top five. Share price down 15.64%. So that's a fairly big company. Market cap is 7.67 billion. And yeah, that's another company I had to talk about. And I've also included EVT. Share price down 14.8%, and that's in top five. And this is one I just didn't understand. Share price had been on a run, and I went, why is the market really positive about EVT? I just didn't understand it. And I'm so glad I totally ignored the market. Anyway, apart from that, I can't remember. Oh, Lindsay Australia did release a report, share price down 12.25%. And as we turn attention to the top losers by market cap, yeah, Stanmore Resources released results. Nuix released results. Yeah, but Michael Hill released results. And that's about it. Other companies that release results that I won't talk about include People in share price up 15. Oh, maybe I can talk about, maybe that can be the chart of the day. People in chart of the day. Why not? Now let's have a look at close the loop. Actually, yeah, and I'll just briefly mention some of the other results that piqued my interest today. So close the loop share price down 23.81%. And my question to anyone trying to, or any shareholders in this is, first question would be why? Why do you own shares in this? Maybe if you're trading it, maybe. Now, where was it? So they released a financial 25 performance update on the 12th of June. And then on the 23rd of June, just 2 weeks later, another market update. And they've released results today. If I remember correctly, one of these was positive. And let's have a look. 12 and 23. So on the 12th of June, the share price dropped 28%. You can see what happened after that. Share price went from 6.7 cents down to 2.5 cents. And then on the 24th of June, do I have my dates right? 12th of June and the 23rd of June. So 12th of June, there was a fairly negative update, and then they released what seemed like a little bit more of a positive update. And that was, they must have released that fairly late because the share price bounced the next day. And then we saw the share price rally after that. In fact, the share price went down to a low of 2.1 cents. So they must have released that on the 23rd fairly late after market had closed. And let's just check that. 23rd of June, market update. No, 8:20 a.m. So for some reason, the market did not react to that initially, but it was the next day. I have no idea. Okay, so I don't really care about this at all. So originally I was going to include this in my top five, and then I went, nah, the company is so small and share price has been so volatile. And it's just like, meh. So what I'm going to do is I do remember they mentioned something in their results. Let's have a look. So in their outlook, oh, that's right. All they mentioned in the market update on the 23rd of June was having a bit of cash on hand and then some other stuff. Da, da, da. And they also mentioned that in financial year 26, EBITDA was going to improve or increase. Well, good and well, that's fair enough to say that, but whether that happens is another story. Now, on the 12th of June announcement, they mentioned revenue for the second half remains in line with the first half, 99 million. So in a way, their expectations for revenue were $198 million, and it came in at $195 million. So that was a bit of a miss. They also mentioned this. I didn't like this at all. EBITDA for second half is expected to be 50% lower than first half. Give us some numbers. That means we have to do a little bit more work. And it came in, if I remember correctly, 12.1, maybe it was 12.3 for the first half, came in at 6.1 for the second half. So it was 50% lower, something like that. So that wasn't much of a difference. And then I just gave up after that. Yeah, so closed loop has been an extraordinary disappointment for the market. And just look at these numbers. Revenue down 7%, underlying EBITDA down 59%, underlying NPATA down 70%. A quick operating cash flow, 11.8 million down. Net debt up $53.4 million. And that is probably my biggest concern. Net debt of 53.4 million for a company that has now a market cap of, if I remember, has a market cap of $17 million. Share price down 90% in the last Yeah. And this has been, yeah, a disaster. Close the loop. So all those environmental people who wanted to buy this company just because, oh, it's an environmental company, environmentally friendly company. Yeah, their capital has been destroyed. In fact, this is an ugly, ugly looking chart. In fact, since August 2023, share price at that point was 45 cents. Now it is, what is it? 3 cents. Share price has gone from 45 to 3.2 cents in 2 years. And this, and again, why? Why would you be even thinking about owning shares in this company at this point in time? Maybe in the future, but not now. Okay, that's it for the top loser today, which is Close the Loop. Now onto the top 5 stocks of the day. And I actually did change this. Originally, Close the Loop was going to be in the top 5, and then I kicked it out for EVT. So let's have a look. Oh, actually, before that, some of the other announcements today that raised my interest. Adore Beauty. I mentioned Adore Beauty, I think, yesterday. I said the share price was looking interesting, or the chart was looking interesting, and maybe you can see the share price breaking up. Maybe someone got wind of these results on Friday. Share price popped up 5.9%. There was a bit of a gap there, and then today share price up another 11%. So this is exactly what I'm looking for. Again, the company itself, I just don't know. Results actually did look good. So Adore Beauty tickled my fancy. Ansell also tickled my fancy as well. Share price up 9.36%. I thought the results were pretty good. And I was actually a little bit surprised the share price was not even up even higher. Expected this to be in my top 5. We have seen a bit of selling. We have seen a little bit of selling for Ansell. That's interesting. So not the best one-day candlestick. What else? Well, oh, people. Did I mention people in? I think I did. People in, share price up 15.32%. They're doing a buyback. I'm wondering if the share price is bouncing or up on the buyback. Results were meh. But again, not the sort of company I would even think about investing in because they are labor intensive, and I don't like labor intensive companies. Very low margins, and the chart looks awful. Okay, what else? We had, well, this one didn't tickle my fancy, but this was interesting because Lindsay Australia down 11.56%. And what was interesting about this one is this had the makings of a potential breakout. And then I think I mentioned this in the video. It looked like it started to look interesting. And then today, in fact, just leading into today, the share price was a little bit weak. There was a little bit of weakness in the share price. And then today, all over Red Rover for Lindsay Australia. And what else? Nuix. Share price down 10%? No, 4.6%. Oh, surprising. And what else? Oh, PolyNovo released results. Share price up 8.18%. I thought this was good as well. Let's have a look at PolyNovo's chart. And is this an interesting? No, it's not. Kogan released results as well. And lots of other companies released results. But these are the main ones that tickled my fancy today. Even Prenti released results. That was pretty good. In fact, I put a question mark. For a lot of companies just in case there weren't 5 companies who had a really positive reaction from the market. But we got those 5 companies. And let's start talking about those companies from now with EVT. Share price down 15% on this is something I didn't really understand why the share price was running up. Release results. Now, there was nothing in Morgan's Canada, so I had no idea of expectations. So I did rely on Capital Brief for this one. So they miss expectation. Oh, there we go. Cinema's disappointment. Well, yeah, they disappoint me. Well, they've been disappointing to me for decades, but that's just me. I have not been to the cinema for almost 10 years. Wow. I used to go every single Friday in the United States, every single Friday for like $4. And then I'll slip into see another movie. And every single Friday, it used to be because I didn't have any classes on Friday, and now I don't go at all. Maybe I'm just a fuddy-duddy. Anyway, so City Analysis flagged that the results listed 10 different significant items worth a collective 9.3 million with little explanation on them. And that underlying NPAT of 39 million missed City estimates by 9% amid higher than expected tax and slightly lower sales. So that's I'm not sure what to think of that. Higher than expected tax. Is that the problem of EVT? They can't really control that, can they? They also flagged that the EVT Cinemas business posted 1.8% revenue growth, which was below the broader box office growth of 4%. However, they noted disruptions. Yeah, talking about the weather. Um, that's a very short period of time. Come on. Anyway, so people aren't going to the movies anymore, maybe. I have no idea. Although I'm pretty sure EVT, their movies or their cinemas are really expensive. For some reason I think that, and I hate paying like $20 just to go to the movies, which is probably why I haven't gone for 20 years again. Anyway, let's have a look at the chart. Oh, by the way, I'm just going to have a quick look at these numbers. So revenue up 1.3%, EBITDA up 6.3%, profit up 12.7%. So a little bit of increase in margins with that, but I prefer to see revenue increasing by more than 1.3%. And I just don't find how like hotels, entertainment, including cinemas, Threadbro, and property could be that exciting. Like there's going to be significant growth in these sectors. And oh, here we go. And they have a trading update. I wonder if this was also a reason share price dropped. Expecting EBITDA growth on financial year 25. You'd want to see it growing. That's the whole point of being, of a company is to grow and grow and grow. Okay, let's have a look at the chart. And this is the reason why I just didn't understand this one. I've been looking at this one for a long time, saying, why? It was a nice little trade if you were willing to trade it. So the share price broke out of a downtrend, long-term downtrend back in late 2024 when the share price was $11 and the share price just kept on rising. I just didn't understand it. Just didn't understand it. And now we've seen what's happened when the market gets it wrong. In my opinion, this is where the market gets it wrong. This could be, I'm going to say right now, this could be a trend killer. So I'm going to put it into my trend killer watch list. There it is, trend killer watch list. Okay, so that's EVT coming in at number 5, a potential trend killer event with very disappointing, maybe not very, but disappointing results. And wasn't disappointing to me. I just didn't expect anything. Coming in at number 4, we have IPD Group. Always have to think about which good it is. And I'd have to think it's IPD, which means it's by PG, not IPD, which is taken by Impedimed, and Impedimed sucks. The company. Anyway, that's a whole different story. Share price up 14.68%. I have to give this 2 thumbs up. I really want to talk about this. I really, really wanted to talk about IPD. So I'm very excited the share price is up this amount because originally when I saw the share price increase, it wasn't only up 11%. I was like, oh, okay. Anyway, so these results were better than expected. And the reason we know that is if we go back to financial year 25 earnings guidance on the 28th of May and we compare, they were beat. They doing better than expected. So EBITDA was expected to be at the high end 46.3 and EBITDA came in at 46.4. That's a beat. That's a beat. And EBIT expected to come in at 39.2. Well, between 38.6 and 39.2. And this was 39.2. So at the top of the guidance range. So even though it's at the top of the guidance range, it's still a beat. So the results were better than expected. And in fact, when I saw these results, I was like, these results are pretty good. I don't mind these results at all. Now, my only problem is if you have a look at the pro forma, look, if you have a look at the total, the reported profit, the reported revenue, reported EBIT, reported EBITDA, they're all up significantly. But pro forma is the thing to look at because of acquisitions. And unfortunately, gross profit, EBITDA, EBIT, and NPAT were all down. But this was to be expected. So people will be saying, I would assume some investors will be saying, why is the share price up when everything's down? I don't understand. It's because it's better than expected. That's it. That's it. I did not have a look to see if there was any sort of outlook. Here we go. It's just talking about how the ends of market remains challenging. So nothing much there of note. So the reason this is interesting to me is because I'm pretty sure I mentioned this company. Did I? I'm pretty sure I mentioned this company yesterday. And I said this is on the precipice of possibly breaking up, particularly if they do release some good results. And this is definitely breaking out. I'm calling it right now. This is a breakout for IPD Group. Beautiful looking chart and potential trade. I already own some shares. It's in my super, but I might trade it. Might trade it. Okay, let's turn our attention to, and by the way, the 1 day candlestick, this is exactly what you want to see. Solid green candlestick, just continue buying through the day. Or the enthusiasm of the buying. Sometimes when I say that, I'm assuming some people say, well, for every buyer, there's a seller. That's true, but it's about the enthusiasm. It's enthusiasm. That's the main thing. So who's buying on market or who's putting in limit orders? And the buyers, because they're more enthusiastic, are buying on market, and that is sending the share price higher. And sellers are more than likely, most of them are putting in limit orders and not because the share price is rising, and they're not selling on market. And that is how you get the share price to rise. So even though there's same amount of buyers and sellers, that's how the share price rise. So that's very important. It's the enthusiasm that makes the share price rise on a day like this. And the people are enthusiastic. Okay, coming in at number 3, we have Southern Cross Media or something. Southern Cross Media share price up 19.7%. Wowzers. Okay, probably the first thing is they did release a bit of an update recently. When was it? When did I read it? Oh, here it is, the 1st of July. And they mentioned that things were looking pretty good. They mentioned things were looking pretty good at this point. In fact, they mentioned going back to dividends. I'm pretty sure they mentioned they were going to reinstate dividends. Yeah, they mentioned somewhere they were going to reinstate dividends. Okay, so I don't get much indication on how these results compared to expectations, but I'm assuming these results were a little bit better than expected. Maybe the market was a little bit surprised they actually are going back to dividends. So revenue up 5%. By the way, I have no idea what sort of media they do. I have no idea what they own because I don't really care. Oh, it looks like radio. So it's only radio, looks like. I still don't care. I honestly don't understand why people listen to radio. That's just me anyway. Um, anyway, but everything's looking good. Revenue up 421.9 million. Now, this is a fairly small company, by the way. It's a market cap of 160 million, maybe. 189.52 million, not that far off. It's a fairly small company, and I think the margins are fairly low. They're also talking about digital revenue up 28.8%. And yeah, so I suppose these results were pretty good. The market liked it. The market liked it. Okay. What I might do now, actually, is just have a look at the financial report because I've got nothing else to say. And there's nothing in Capital Breathe. There was nothing I'm pretty sure there was nothing in Morgan's calendar about this company. It's just too small. No one cares. Okay, so let's just have a look at the results. So let's ignore that profit is up 103%. Yeah, that's excluding CFN items, profit up 239%. So you might look at that and go, whoa, this company is growing significantly like a leopard, like a cheetah, the growth, but then revenue is only up 5%. And you can just compare the revenue to the profit. You just see this company exists on very low margins. So all it takes is a little bit of negativity in this space, and the profit could just drop like a rock even if revenue goes up a little bit, decreasing margin. So that's another thing to pay attention to. Austereo, Southern Cross Austereo. I'm just going to go very quick look. Where is it? 34. We want page 34. Nearly there, nearly there. Okay, so nice increase in revenue. Last year they had an impairment, a massive impairment, a $326 million impairment for a company with a market cap of 187 million. That's a massive impairment. Wowzers. Looks like they have a bit of debt as well because interest expense is like 18.9 million. So that looks like a fair bit of debt with that sort of interest. This company would be fairly profitable if they didn't have any debt. because add that back to the profit and ooh, wowzers. So this company, you have to include the debt. So if you have a look at the amount of debt, borrowings $102.8 million. They also have a fair bit of lease liability. Total equity is, oh, look at that equity. What that is that? I'm going to say $212 million. So the company is currently trading on below equity, book value. So why is intangible? Oh, intangible assets. Meh. And let's have a look at the cash flow. $65.4 million of operating cash flow. You might go, wowzers, that's a lot of operating cash flow. But that does not include lease liabilities. Actually, lease liabilities is not that much. Interest is more than lease liabilities. Actually, that's not bad operating cash flow for a company this size. That's probably why they paid a fair bit of debt down. Hmm. That's not bad. Not bad. Okay. Let's have a look at the chart. The chart is interesting as well. Would I trade this one? Yes, I would trade this one, even though I'm sort of poo-pooing the company. I would trade any company at all. Any company I would trade. And the share price has possibly broken out today. Got above the previous high at 76 cents. And the last time share price was this high was back in May 2024. So it's on about a 1 year high. Whoopie-doo. 1 year high. In fact, let's have a look at the weekly chart. And this is sort of the weekly chart I would expect. It's not, I just don't see how this company can grow all that much. I just don't see how radio can be a growth area. Maybe that's just me. I just have no idea. There's just so much competition here. You have podcasts, you can listen to your music on your phone via your car. I just don't understand why people listen to radio. Maybe it's just me again. But anyway, that's a nasty looking weekly chart. Okay, coming in at number 2, we have Reece. Reese's Pieces. My dad loves Reese's Pieces. He loves peanut butter. Share price down 15.64%. It was down more than that. I'm pretty sure it was almost down 20%. Maybe. Close. Okay. I actually did write down some notes for this one. This is one where I did see or have expectations. So Reece, let's have a look at their results. And I don't think it was as bad as what the market is suggesting. So revenue was down 1% to 8.978 million, but that was actually a beat. So expectations were 8.856 million according to Morgan's calendar. EBITDA came in, where is it? EBITDA came in 901 million, which was a slight beat. Expected EBITDA was 900 million. Hey, 2 slight beats, but overall, compared to last year, down 11%. Profit came in at 317 million. Unfortunately, expected profit was 326. So this was a fairly big miss and down 24% on last year. And expected dividends were 19.1 cents and unfortunately came in at 18.4 cents. So a bit of a disappointment when it came to profit and dividends. And that's one of the reasons why the share price is down. Okay. And Peter Wilson mentions here, we delivered a disappointing result. With 4-year earnings impacted by soft end markets across both regions. Now, this could be near the bottom of the cycle. Who said? It was Tourism Holdings that said we're at the bottom of the cycle in terms of tourism. Yeah, maybe. I don't know. Let's have a look at the chart for Reese's Pieces. Yeah, plumbing. Maybe. Is it plumbing? I think it is. Okay, this is the weekly. It has dropped below $13, which was an important level. In fact, the share price now is at a 5-year low. I still remember when the share price popped up last August. No, last February. February, yeah. I still remember that going, P ratio is like 45, 50. Really? Really? I got into an argument with someone on Twitter. It wasn't actually about this company, it was another company. I said, it's not that good. Share price popped up. It's not that good. Anyway, share price has dropped a lot since then. In fact, it's more than halved. Daily chart probably looks pretty ugly. Still in the downtrend. We have seen a little bit of buying coming in today. Now, they did release a negative update on the 27th of June. Share price went down on that particular day. And I just don't think now's the time to get excited about this company. Unless you think this is a high quality company and there's value here now. Other than that, not for me at all. Okay, stock of the day with a bullet. Bing, bing, bing is Aussie Broadband. Interesting. Interesting. I saw the first announcement I saw from Aussie Broadband today was they announced more wholesale services agreement. I do know more because they were my internet provider before I moved, and I had no problems with them. In fact, they're owned by who are they owned by? It was like it had something to do with CBA. I forget. So that's the first thing I saw, and then with that announcement, I looked to see what the share price had done. I went, really? Share price up 18% on this announcement. That's interesting. And then I saw they did release results. Anyway, so they also sold Buddy for $8 million. And I'm pretty sure they mentioned that in this announcement. Yeah, the 6-year wholesale agreement with More Telecom to provide NBN network services to More and its jointly operated group, Tangerine Telecom. And they sold Buddy, which is their low cost internet thingy. Yeah, here we go. More is exclusive telco partner to the CBA, customer recognition program, Combank Yellow. I knew that had something to do with CBA, but I wasn't sure what. And here we go. Yeah, selling of Buddy for $8 million. And fun enough, when Aussie Broadband announced Buddy about a year ago, the share price dropped because they said, "Hey, we're going to spend $10 million on Buddy," and the share price, and they said, and that means our forecast profit's going to be 10 million down. And people thought that was a downgrade. It wasn't a downgrade. I still get really upset by that. It was not a downgrade. And when that happened, I bought some shares because I thought the market was being stupid, and it was a good move. I'm also trading Aussie Broadband now, and I'll show you why in a second. Okay, on to their results. This is why the share price popped up today. Okay, and I actually wrote down just one thing, underlying EBITDA. And they actually did mention recently, if I can find it, maybe it was a half year result. I know it was a trading update on the 10th of April. They did give EBITDA guidance here. And the EBITDA guidance was between 133 and 138 million. And guess what they got? Guess what EBITDA they did achieve? EBITDA of 138.2 million. So it was a beat. It was a beat. And that's the only guidance they provided. They actually mentioned here at top end of upgraded guidance. No, it wasn't. It was above guidance. It was above guidance, buddy. Although maybe they changed guidance recently. I didn't see it. Anyway, share price up a lot. Maybe it's a combination of this wholesale agreement with More and the results. And let's have a look at the chart for Aussie Broadband. So I'll probably not classify Aussie Broadband as high quality, but I think it will get there eventually. So that's one of the reasons I am a shareholder. And yeah, this is the chart. So this is when they announced that sort of a profit downgrade, which wasn't really. There was an announcement of them, Buddy. That was on the 15th of July. Share price dropped 14% on that day. And in fact, the share price got to a low the next day of 291, 288. And I bought, I just went, no, this is stupid. Market is stupid here. And then the share price moved into uptrend not long after that, about a month after. And this was a slowly developing uptrend. And I bought on the breakout. So I'm trading on this breakout. When the share price broke out above 420, about 430, you can see it was trying, and then it broke out above. I thought maybe the share price would pull back a little bit and then keep on going up. But then today, yeah, nice. Look at the volume today as well. Massive volume coming through. So beautiful chart for Aussie Broadband. Not an all-time high, but we're talking about a 3-year high. And yeah, pretty good looking chart. There's me buying. That wasn't me buying originally. In fact, I bought Aussie Broadband near open when they IPO'd, and then I added, and then I added again, and then I added again as a trade. So I've bought 4 times Aussie Broadband. Well, 4 times I bought some more shares in Aussie Broadband. Okay. What else do we have? Chart of the day. People in. Uh, we've already looked at people in, haven't we? Chart of the day. I'm going to choose one. Chart of the day. Chart of the day. Does it have to be chart of the day? I can't think of one right now. What about one of the companies that I thought? No, I've already looked at all those. Chart of the day. SICK. I'm going to look at SICK again. And I think I might have looked at SICK yesterday. I can't remember. Oh, I like this. I like this. Share price popped up yesterday. And no, that's last week. Share price popped up last week. And look what's happened since then. Oh, no selling is coming in. That's good. That's good. I was hoping the share price could pull back to $27 and maybe I could put a sneaky bid in. Maybe I'll put a sneaky bid in later today. Oh, market's about to close. Okay, that's all I have for this particular look at the ASX today. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.